Hi, all you traders out there. I wanted to play through the NQ chart. I already did the ES today and posted that, but I know that there were some people that traded the NQ and were a little bit disappointed with the results. And I wanted to show you folks an alternative method of trading. I know that a lot of people use the indicators and this, that, and the other. Moving averages and RSI crossovers and that sort of thing to trade the market. What's nice about this method is it's chart independent, and you can put it on any chart. You can put it. I wouldn't use it with the Heikin Ashi or Renko bars because those are averaging, but any sort of candlestick, any time periods. I use a 5-minute chart. A lot of people use a 5-minute chart, especially on the ES. But you can use it on a 1, you can use it on a 5, whatever you want. The reason why it works on pretty much any chart, Heikin Ashi and Renko bars included. I don't use it on that kind of a chart, but you can. The reason why that it works on pretty much any chart is that you're looking at Fibonacci retracements and Fibonacci price extensions based on particular times in the market. For example, London high and low. So what you're seeing right in front of you is an NQ chart from today, from this morning. I haven't played through this. I don't usually trade the NQ, and I'm going to do the same thing with with the YM. I usually don't trade with the YM either, but I'm going to use my standard setup. What I do is I trade 3 ticks, 3 ticks below or 3 ticks above, depending on market direction, the 61.8 Fibonacci levels. And that seems to work out really, really well. For example, to figure out where my entry is, I usually start about 5 to 10 minutes before the market opens. I start drawing my fibs. I'll draw a fib line, 61.8 from the, say for example, from the London high or the Asian high. You can do it either way, since they're very, very close. London high to the London low. Now the London high to the London low gives me an entry 61.8 of 48.1950, which is pretty high up there. I very seriously doubt the market's going to get up that high. I don't think we're going to see that deep of a pullback, and the reason why is because the market usually will pull back to the 50 EMA, but not to the 200. It's pretty. If you see a pullback to the 200 EMA, not always, but it's usually either news or it's a trend change. So what I'll do is I'll draw the fib the other way, from the London low to the London high. Okay, that gives me a entry of 48.1625. So what I'll do is, since I was late coming to the party, I should have been here, let me look. What time did that come up there? Because if that's, 3 ticks below that, that's right there, 48.1550. And that, that hit the market, about 9:10. So, I'm a little late to the party, but you know what? I think we can salvage this. So I've got my entry. Now I draw my fib line. For example, I can go from the Asian high to the Asian high to the London low, and gives me a 48.0350. Or I can draw it from the London London high to the London low, which also gives me 48.0350. How about that? Okay, so now I've got my downside target. I've got my entry at 48.1625 and my downside target at 48.0350. So what I'll do is I'll put a sell limit order 3 ticks below. Here we are. What is it? 1625. So I want to put a sell limit order 3 ticks below that. Okay. And now I want to come down here and make sure that my 1, 2, 3. Okay. 3 ticks below, above that. So that, that gives me a pretty nice, 48.15 to 48.04. If you're trading more than, if you're trading one contract, fine. If you're trading more than one contract, that's cool too. So if it's true to form, if it did exactly what it did on the ES, then it should fill that target. The ES downside target got filled in about 9 minutes, 9.5 minutes. This one should go pretty quick. So let's see what happens. So let's hit play and see what happens. Okay, now I'll crank it up a little bit. Here we go. Okay, it's going upside. It's playing with Merali's. It's playing with Merali's L3 level there. Merali's L4 is down by yesterday's low, which sometimes happens. So we're they're going up there. They're flirting with the level. If it was true to form, they dump it a little bit and then they come back up and get it. That's what they did on the ES. Okay. Let's see what happens. Because, as I recall, he fiddled around with it for quite a while. Well, for, 5 minutes or so. Now, here's the, okay, here we go, market open. Oh, it jumped up and hit it. Okay, excellent. So, let's go up to 30 times. So I'm in. Here we go, downside, downside, downside. Here we go. Boom, boom, boom. Okay, bam, we're filled. What time is it? Within 6 minutes of market open, we filled 45 ticks. One contract, 45 ticks. That would be, let's see, what, $225? Not bad. 200, that was, let me go back and look. That was 225, wasn't it? I usually figure, yeah, 45 ticks. I usually figure things in ticks and then have to convert in my head. So you're looking at $225 profit or $220 profit on one contract. So that's pretty good. That's a pretty decent move. That was just about the profit that we made on the ES. So I'm going to go off and check the YM and see what happens. Anyway, did you notice that the downside target, when I drew the fib, either way I drew the fib, the downside target was either 161.8 or 61.8. The downside target was the same. So you could have probably held on for that 47.9875, but you know what? For 6 minutes worth of trading, and you walk away and you're done for the day, you just made $220 on one contract. If you wanted to go 2 contracts, you'd have made $440 or $435. And walk away and go to breakfast. 6 minutes worth of trading. All right, see you next time, guys.